Hello again, fellow BeachBum traders. Thank you again for joining us for part one of our weekly trading game plan for the trading week of August 5th through August 9th, where we'll strive to help you make money trading in August of 2024. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for August 5th through August 9th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our market strategies, our trade ideas for this trading week. And again, you can find a direct link to our notes document in the description box below. We keep all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week, as well as previous weekly trading game plans, and you can find a direct link to that Google Drive folder in the description box below. So firstly, we'll take a look at how the markets ended up on Friday. Hopefully you all did well in Mr. Market's wild ride in the markets this week. We'll see on Friday, markets all ended up significantly down, had a significant decline on both Thursday and Friday, as we'll see. So the Dow ended up down 1.5%, NASDAQ down 2.4%, S&P down 1.8%. We do see a little bit of a buy the dip on market on close candles on all of the indices. So there was a little bit of buy the dip action at the very end of the day. See, we had many more decliners than advancers, so 79% decliners, 18% advancers, only 47% new highs, 53% new lows. We've now only got 43% above their 50-day moving average, almost 57% below, and we've still got 60 above their 200-day moving average, 40% below. So even though this shows bullish at the very end of the day, as we can see, the markets were generally in decline the majority of the day and then leveled off in the afternoon. See a significant profit taking out of the Mag 7. Technology hit pretty hard with the exception of Apple. Apple had decent earnings, not great, but decent. So Apple's been holding up pretty well. The rest of the Mag 7, significant profit taking there. Had a couple healthcare greens, consumer defensive. We'll also see utilities when we look at the sectors and industries as well. Welcome to Ricky Kahn, MD, LinkedIn, Tony Roses, Fairchild. Thank you all for joining us in the chat today. Chris Freeman, glad to see you. Thank you for joining us. Thank you for the positive feedback. Really appreciate that. We look at some of the news. Big tech's AI promises become a show me story. Again, something we've been talking about. Show me the profit, show me the money that they're actually making money on big tech, and that possibly the AI FOMO is deflating significantly. Big AI tech investment is going right to NVIDIA. Global stocks plunge, bond prices rally. We'll see the significant rally in the bonds. NASDAQ falls into correction, so technically NASDAQ's now in a correction phase. S&P slides after weak jobs report. We'll also talk about the manufacturing data weak manufacturing data that seemed to trigger some of this decline. Dow down 600 points. Again, NASDAQ enters correction. Welcome, Gerald Fitz. Thank you for joining us. Hope you're doing well. Saw oil had broken down below 75. It did get a bounce. Looks like it went as low as 73. Bounced back up. We now got resistance at 75, support at 70. Natural gas broke down below 2. So we'll, I think the bottom on natural gas like 1.52, but it did rebound. Now it's got resistance at 2. Gold had surged up over 2,500, did retrace slightly. It's trying to regain a footing above that 2,500 level, so we'll see that as well. See, all the futures are pointing significantly decline at this time. Also saw a rebound finally in the Japanese yen that we'll see in the futures. So it finally did rebound, had a multi-day rally. We'll talk about the Bank of Japan did raise their interest rates by a quarter point. Um, and again, we saw a pretty strong rally in the yen finally. Bitcoin sitting about 6,200. Again, we saw a significant drop in bond yields, significant pop in bond prices. We now got the 10 and the 5 below 4%. 30 is hanging out at 4.1%. So now we've got the 5 at 3.6, 10 at about 3.8. So again, we might see more declines in the longer end of the curve as we saw in the shorter end of the curve. So again, we'll see that pretty steep uptrend in the bond prices. So if we look at a breakdown of the indices, and just a quick reminder, you can access these screeners in our notes documents, also in the screener sheets, in our ETFs and Watchlist Google Sheets. So you can get a breakdown of the main market indices as well as the technology components. So if we look at the major indices, again, we see we're rallying up early in the week, and then Thursday, Friday, steep decline. See the Dow broke down below the lower trend line, down to that pivot point. Looks like it got real good support just below 400 at that moving average and that pivot point. So that says we might get a bounce in the Dow, again, just based on the moving average and support levels. IWM got hit hard, so that was interesting as well. So we'll talk about the FOMC, July FOMC interest rate decision as well. So even though they're indicated their propensity to cut in September and in the near future, which is beneficial for small caps, they suffered a steep decline with the rest of the market, right down to the moving average, a little bit below, got a little bit of room to that lower trend line. So again, maybe some and a gap to fill. So we may see some more downside in the Russell small caps. NASDAQ, again, Mag 7 got hit pretty hard. It broke down below, triple Qs broke down below its channel. It's got more room down to its moving average. So again, more potential downside in the NASDAQ, again, fueled primarily by the Mag 7. Not so much the SPY, but the SPY did also break down below its moving average, below the lower trend line of its channel, below that 540 level, which is a significant level. So again, now potentially more downside in the SPY down to the previous level of about 520. So indications are, more downside potential to come. Again, in my humble opinion, we may see a relief rally, a reflexive bounce. The buy the dippers and the Mag 7, I think, are still pretty relentless. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. We also, as we'll see in the future, saw a significant rise in volatility. I expect that to continue for some time. So again, I wouldn't be at all surprised to see some violent relief rallies. But again, the indications are particularly in technology and the small caps for more downside to come. So if we look at a breakdown of the technology components, see ARC got hit pretty significantly, broke down below its previous low, sitting at a lower trend line. So again, more potential downside in ARC. FANGs, again, primarily the Mag 7. Not all the Mag 7, but most of them broke down out of its channel. It's got more potential downside to its moving average. So again, more potential downside in the Mag 7s and the FANGs. Semiconductors held up a little bit better. Again, saw quite a bit of volatility in NVIDIA. AMD had some positive earnings, had spurred a rally in the market on Wednesday. I think that's part of what fueled the market rally on Wednesday, but then we see it broke down as well now below the moving average, below the previous low. So again, more potential downside in most of the semiconductors. Again, Intel had very disappointing earnings, reported a cut in dividend and dropped significantly, the most in several decades. So broader technology, again, not quite as much of a decline, but again, now below its moving average, below the trend. Looks like it's probably going to test the previous low. So again, more downside in technology. We talked about the Nasdaq, the Qs. You can see TQQQ though is approaching that moving average. So again, that might signify some bounce, some relief rally in the Qs in general. So I hope that all helps. Welcome to Crow. Thank you for joining us. I see a number of people are pointing out, the inverses of these. We've talked about TECS as a short, SOXS. Again, you can find all these longs. These are all the long technology component leveraged ETFs, and we had the short versions, and hopefully you all were able to profit and benefit from those leveraged short ETFs that we have in our ETF Google Sheet this week. Okay, let me grab a quick drink and we'll look at the breakdown of the groups, industries, sectors, and how they performed this week. Okay, if we look at a breakdown of the sectors for this week, let's see again, flight to safety on Friday. So utilities, consumer defenses, real estate, a little bit of healthcare. The hardest hit were technology, financials, energy, and cyclicals. So cyclicals and technology, again, heavily weighted with the Mag 7s. So again, a very flight to safety, a very defensive bent on Friday for the whole week. Similarly, again, flight to safety, very defensive bent, utilities, real estate, again, sectors that benefit from cuts in interest rates and also very defensive. Again, we've been seeing this rebound in real estate. We see this trend in general. So real estate moving up, people rotating into real estate, out of technologies, out of cyclicals. Again, financials had been very strong. So seeing a rotation out of financials, industrials had been very strong. Rotation out of industrials. Energy, again, we saw a pop up in oil on global tensions in the Middle East, and then it quickly retraced back down below 75. Seems to be downtrending at this time. So again, negative rotation in energy. Very for the whole month so far. Again, very flight to safety, very defensive. Utilities, real estate, defensive, some healthcare, and again, out of cyclicals, out of technology, out of energy, etc. So if we look at the industries, see just a smattering of various sectors, some industries, probably positive earnings. Generally, though, utilities, REITs, again, mostly real estate, REITs, some REITs were negative, industrial, mortgage, negative. Gold and silver, again, even with that run up in gold stocks generally down. Again, material, steel, copper, coal, energy, Airlines down, solar very negative, silver, again, energy, aluminum materials, uranium. Again, we'll be talking about a uranium stock we're watching tomorrow. I did look at some of the others. Uranium is pretty significant retracement coming back down, cycling back down. So again, we're looking at opportunities. We've got one stock we're watching, and I did take a look at some of the others that we typically play for uranium. So we'll be looking for a bottom and cycle back up in uranium. Again, so for the week, some REITs positive. Gold was positive for the week. Again, broke up over 2,500. Energy generally negative. Some, again, mortgage REITs are negative. Office REITs negative. Again, energy, basic materials generally negative. Silver quite negative for the week. Coal, and again, uranium you see for the week was significantly negative. So we got a significant retracement in uranium. Again, we're looking for opportunities in that area. For the month, again, REITs, real estate. So you can hear the theme, real estate. Gold somewhat positive. Again, that I think the pop in gold was based on the global tensions. It's not an inflation hedge. Inflation's coming down, so I don't think that's the theme. Silver, though, was significantly negative. Again, we got weak manufacturing, so it's viewed as an industrial metal. Again, uranium very negative. Airlines pretty negative. Aluminum. So I hope that all helps. Welcome, Logan Flips, Walter Lyons. Thank you all for joining us. Hope you all are doing well. So we'll go through the economic data from last week, talk about the economic data for the upcoming week. Let's quickly go over some of the highlights, and then we'll look at the whole calendar from last week and also the upcoming week. Just a quick reminder, as the important economic data comes out and important economic news, I try to capture that and post it in the Surf the Markets channel in our Discord. Our Discord's free to join. You can find a free invite in the description box below, also in the notes. So again, we'd love to have you join us in the Discord, get real-time economic data, economic news, and also discuss all topics related to trading. So you can see when the economic data comes out, try to capture a snapshot from investing.com, also the raw data. Also capture some from FinBiz, like natural gas and oil inventories, and also important economic news. So again, great source for real-time economic data is join our Discord, watch the Surf the Markets channel. Okay, so the big news on Wednesday, again, markets were, waiting for the FOMC decision, although as we discussed last week, probability was almost 100%. They weren't going to make any changes. That's what we got. They left the interest rate at 5.5. So again, that was no surprise. The people were really focused on what's Powell going to say. So we looked at the statement. We captured a couple. I put a link to the whole statement. If you'd like to read the whole FOMC statement, there's a link to that in the notes. Just some highlights. They reiterate no rate cuts until it's more confident that inflation is moving to 2%. They're holding at their 2% target. They need more data, more confidence. Again, everything we said was expected. We expected them to want to see more data, want to get more confidence, want to make sure inflation's going to their 2% target before they make any moves. They did point out inflation's eased, but remains somewhat elevated. So again, still above their 2% target. They're not confident that they've got inflation beat. Powell also made a number of statements that the job market is coming more in balance, that the balance of risk between inflation and employment are coming more in balance. And so they have to start focusing potentially, is what he said on that day, start considering both sides of their mandate, both inflation and unemployment. He also said the unemployment rate was okay where it was. Again, we'll see that popped up a little bit, and that's probably what caused a lot of the negative reaction in the markets on Thursday, Friday. His press conference, he said the time is approaching for a rate cut. Again, he sounded like they'd like to make a September rate cut. He also stressed the apolitical nature of the Fed, and kind of I thought that was supporting the potential for a September rate cut, that would be apolitical, not political. So again, a lot of statements in there supporting a September rate cut, and you saw the market rallied strongly on Wednesday after the FOMC decision. So again, we saw a strong recovery in the Mag 7s, technology, the Russell, etc. So based on, again, the forecast that we're going to get a rate cut probably the first in September. And I guess they're projecting, 3 rate cuts. This was all before the jobs data that we're going to discuss. So Thursday, this was interesting. Got jobs cut data early, and there were fewer job cuts. Number of job cuts was down, so less people cutting jobs. Then we got the initial jobless claims for the week, and it was higher than expected, somewhat significant. So more people filing unemployment. Also, continuing claims is a little bit higher than expected. So it shows a weakening in the job market. And again, this was the current week. That productivity was actually positive. So that's actually a positive. So the people working are being more productive, and labor costs was below expectations. So those are positive for the economy in general. But again, the labor market slightly weakening with more initial claims and more continuing claims. And on Friday, we got the non-farm payroll data. And again, the market reacted pretty negatively to this initial claims data. So we got a pretty steep decline on Thursday. And then we got further decline on Friday on the week non-farm payrolls. So it was significantly below the expectation. Unemployment rate, so again, another major focus, it jumped up to 4.3, so up 0.2%. And again, Powell was kind of focused on this 4.1 as being a pretty decent rate. This jump up to 4.3 started spurring a speculation of a recession, of them having to do an emergency cut. So a lot of, quote, panic in the market based on this higher unemployment rate, the lower non-farm payrolls, also government payrolls down, average hourly week hours down a little bit, earnings down a little bit. So again, this shows weakening in the jobs market. So now the Fed probably has to focus a little bit more on unemployment, and so again, that builds the case, another piece of data building the case for a September rate cut. So again, that's kind of the consensus, I believe, at this time. Again, now people were talking about a probability for a 50-point rate cut in September. In my humble opinion, I don't think that's likely. In my humble opinion, I think we'll get a 25 basis point in September unless there's significant changes in the data. But in my humble opinion, the trajectory of the data and Powell's statements would all support a 25 basis point in September. And then, we'll have to see where the data is at that time. And also we'll get as you'll see, we'll get a dot plot in September. So that'll give us a much better idea of the trajectory going forward. So let's quickly go through some of the rest of the economic data from last week. Let me grab a quick drink and we'll look at the rest of it and then look at the upcoming economic data for next week. Welcome, Tanavir. Glad to see you. Hope you've been doing well. Okay, we look at the rest of the economic data, had some bill auctions, not too bad. Housing prices coming down slowly, so that's also positive for inflation. The jolts, again, job openings coming down a little bit, so again, tightening, more balance in the job market. Mortgage rates down below 7%. Again, good for the housing market, better for the economy. Talked about ADP data. Again, a little weak, less than expected. Again, we got manufacturing data, and this has also spurred the negative sentiment later in the week in the market. Was weak manufacturing, so the economy's slowing. Crude oil inventories up more or down more than expected, but again, we then saw a decline in oil prices. Talked about the FOMC decision. Talked about job cuts and the jobless claims data. So again, we got manufacturing data. That's pretty in line. Construction spending down. This ISM manufacturing employment, though, and new orders weaker than expected. So again, we're getting several signs. We've had signs for some time. Manufacturing slowing down, so the economy slowing down. Natural gas storage up, but less than expected. But again, we saw natural gas break down below 2. Car sales better than previous. Talked about the non-farm payroll. Participation rate went up a little, or the U6 unemployment went up a bit. Participation rate up just slightly. So if we look at the calendar for this week, again, we talked about the spike in volatility we'll see. So we've got some more PMI data, some manufacturing data, non-manufacturing ISM all on Monday. So again, given the state of the market's a little jittery right now. That might, if that comes below expectations, might trigger more downside. Crude oil stocks. Wednesday we got mortgage data, housing type data. Thursday we get weekly jobless claims. So again, probably a focus here. If this continues a downtrend below expectations, particularly below last week, might trigger further downside on Thursday. Natural gas storage. Now we've got Fed officials starting to talk. Some have already come out and said, like Goolsbee came out and said the Fed should have cut in July. We may hear more of that. So that will probably make the market nervous that the Fed's behind the curve. A lot of statements to those effect. Then Friday, so not a whole lot, but again, right now, in my humble opinion, since the market's a little jittery, anything that shows that the economy or the job market is weakening further might cause more potential downside. So watch that economic data, see if it triggers more jitters, more volatility in the market. Also still got a lot of earnings. As we'll see, the Mag 7 have mostly reported with the exception of NVIDIA. So we're through the main Mag 7s, but we have a number of other major stocks. There's Berkshire on Monday, so financials, some other banks, some other tech stocks, some REITs, several retail-related REITs. So we'll hear how commercial real estate and retail is doing. Food companies, so some consumer defensives, etc. So I'd highly recommend you go through and check the earnings calendar, see if any stocks that you're interested in might be reporting earnings or in the same sector for sympathy plays, etc. So again, we still got a ton of earnings coming up. Again, you can hear how we trade around earnings via the video in the notes on how to make money trading when earnings matter. And as we heard, it's not only earnings, it's also their guidance, and also now, particularly with AI-related companies, they're focusing on the spend. How much are they spending on AI versus what kind of return on that investment are they getting? So companies that are spending a lot, not seeing a return, are getting hit negatively. Also, you can see the calendar, the link to the calendar for the Mag 7 earnings, and via the link in the notes. So again, we've got all the major Mag 7s have already reported. We heard, cost cutting at Facebook, positive revenue at Facebook, so they ran for a little while. Tesla's, Microsoft, again, heavy AI spending, not earning a lot of money. Their cloud business was a little, still growing, but weak. Similarly with Amazon, surprising Amazon missed on their revenue. Also, again, AI spend, Amazon got hit, pretty significantly. Google, very similarly, a little disappointing on their digital marketing, although, and similarly with their cloud. Apple did okay, although again, their China sales, etc., kind of weak, foreign sales weak. And again, the only remaining Mag 7 we've got is NVIDIA, and it's not till August 22nd. So again, we've got majority, all the mega caps out of the way. Also gives us a pretty good feel for the trends in earnings as well. Also upcoming, we don't have another FOMC meeting until the middle of September. Again, we'll get another dot plot, another SEP. So again, that will give us a trajectory going forward of probably rate cuts for the rest of the year and going into 25. In the interim for August, they have their Jackson Hole Symposium. So I put the link to the Jackson Hole Symposium. That's late August, so the 22nd through 24th. Again, they'll be making a lot of speeches, papers, etc., more focused on theoretical topics related to the broader economy, etc. But again, people will be focused on what they're saying. Is the Fed behind the curve? Do they need to cut faster, etc.? What do they think of the overall economy? So again, that will cause some volatility, even though it's not a Fed decision per se. So I hope that all helps. Okay, let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can see you can get up to 75 free fractional shares of stock. They're also offering a bonus 2% interest rate for your first 30 days when you open and fund an account with Webull. You can see if you fund your account with 25K, you can get 75 free fractional shares of stock, each worth up to $3,000. Under 25K, you get 20 free fractional shares of stock. They also, again, are offering a 7% for 30 days on your idle cash, etc. So you can see they offer a number of promotions right now that you can take advantage of if you open and fund your account in Webull. Again, we use Webull for our market analysis, our due diligence, the majority of our trading. And if you would open your account with our affiliate link in the description box below, you can also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen on the online browser version of Webull. You can see it's a histogram, very interesting. I see a very left-leaning a histogram this week. We haven't seen that in a long time. The number of decliners much more than the number of advancers. It's all more than 4-1, almost 5-1 decliners. So a very broad-based steep decline. Also, the percentage of decline is pretty significant. So again, quite a bit of fear, quite a bit of quote panic in the market on Friday. So again, probably a lot of profit taking. Things have been up at all-time highs, had run for a long time. Looks like people are, trying to take their profits, get out. We look at the money flow. This is interesting as well. We see a little bit of a dip in the NYSE at the beginning of the day, but then a steady inflow, positive inflow for the day. We saw a pretty steady decline in the NASDAQ early on in the day. Then that leveled out. And then towards the end of the day, again, I think we got some buy the dippers, probably in the Mag 7s. And we saw a little bit of an uptick, recovery in the inflow in the NASDAQ. So again, significant reversal from the past couple weeks that we've seen. Again, you can see the near-term earnings calendar in the calendar section in the market screen in Webull. So again, you can see upcoming earnings, their estimates, etc., when they're going to release the earnings, and keep track of that in the market screen in Webull as well. Let's look at the best performing industries for the week. So again, probably very defensive. Real estate, so we get to see some REITs, utilities. Again, very defensive. Consumer defensives. A couple pharmaceuticals. Industrial, pretty negative. Again, utilities. Natural gas, not quite as positive. Insurance, somewhat negative. Surprisingly, aerospace and defense, even though we had the increased tensions, mostly negative. Look at the ETFs right now. So I'm sure that small cap down, Russell down, mid cap down, NASDAQ down. So again, Dow down. And we've been talking about that S-Dow. Hopefully our community, BeachBum traders, made some good money on decline in S-Dow. Short on the mid caps, short on the S&P. Up on the VIX, 35% jump in the VIX. We saw the VIX, I think it got to 2966, didn't quite break 30. We'll see that the VIX futures have been trailing that a little bit. So again, big surge in the VIX and UVXY, VXX. And short on the Russell, short on small caps. Industrials. So almost everything negative except real estate, utilities, and defensive. So again, very defensive, flight to safety bent. That's probably a copper. Looks like a little bit of a rebound. Soybeans. Zero coupon bonds, government 25 plus. So again, we saw significant increase in bond prices. We'll see, and we'll look at the currencies and the futures. So we'll jump over and look at the futures right now. Again, just a quick reminder, you can now also trade futures in Webull. So you can find more details about their current offers on trading futures in Webull via the link and the discussion in our Discord. Grab a drink a second. We'll go through the futures. Okay, again, well, we had seen a short rally earlier in the week in all the indices, and then Thursday, Friday on the weak manufacturing data, weak employment data, saw steep declines in all the indices. Again, the Dow broke slightly below that 40,000 mark. So we'll see if it bounces and regains that. Quite a bit of support at that level. If it does break down, then we might see it decline to that consolidation range. So potentially, rebound and potentially more downside in the Dow. S&P's broken down, filled that gap. It's got, more potential downside as well. Similarly with the NASDAQ, again, not quite as much support until we get into this consolidation range, which looks like it's breaching that as well. So again, more probably potential downside in the NASDAQ. See that steep correction in the Russell. So again, it had been running up on the hope for rate cuts, and then it gave it pretty much all back. We'll see if it holds that 2100 area. Might get a slight bounce off of there, but again, a significant drop in potential downside in the Russell. Again, now we've got, at least 2 months before we're going to get a rate cut. So more potential downside there in small caps in the Russell. See that dump in the Nikkei, strengthening of the yen. Pretty much all the foreign markets reacted similarly. So Euro stock way down, DAX way down. So all of these are broken down below their previous lows. You'd have to zoom back out to find another support level in those. See that spike in the VIX. Again, the VIX futures trailing the actual VIX significantly. So I believe UVXY is based on, I think, 1 and 3 months or something. VIX futures. So again, more potential upside in UVXY. In my humble opinion, in the VIX futures-based ETFs. And we saw oil break down below 75. Didn't quite make it down to 70, about, low 70s, but reach pretty good support at 70. If it breaks below 70, that'll get pretty interesting. Again, natural gas broke down below 2. Again, I've got an alert set on the 52-week low. I think it's about 1.52. So we'll see if it approaches that 52-week low. And if we get a turnaround loop back up, again, we've got the ETFs, long natural gas, oil, short cold, KOLD. And we saw gold briefly pop above 2,500, didn't quite hold, broke down slightly below 2,500. Looks like it's really trying to get above that 2,500 level. So I think we'll get more volatility attempts at breaking that 25. If it breaks that, it's could have more upside, particularly if we get more global tensions. Silver below 29, again, similar volatility. Oscillating and there's got pretty good support at 28, resistance at 29 now. Looks like copper's trying to rebound a little bit. Cattle dump, palladium again kind of bottoming. So we do have a ETF in our Google Sheet, PALL, if you're interested in that. Not one that I've had any luck trading, but might be interesting. Corn we've talked about for several weeks. Looks like it might have bottomed and turning up. Again, we talked about probably want to trade corn with the futures if you're a futures trader. We do have the corn ETF in our Google Sheet, but the risk reward profile isn't that attractive. Looks like we finally got a swing back up in wheat. So we're currently long wheat using WEAT ETF, so we'll see if wheat can break that 550 level. Probably significant resistance there. So once it breaks that 550, we'll see if we get a long-term swing back up in wheat. Sugar, again, several of these probably we do have an ETF. There's an ETF called CANE, CANE. I looked at the risk reward, didn't see that attractive. So, but potentially it looks like it bounced pretty strongly at 18 or so. So maybe if you're a futures trader, sugar might be interesting as well. See that strong upswing in all the bond prices, strong decline in all the bond yields. So again, maybe some catch up in the 30-year, the longer end of the curve. Bond price saw a big drop in the strength of the dollar, DXY around 103, again on weak economic news, weak employment news. And then again, we saw a surge in the Japanese yen. Bank of Japan increased their interest rates by a quarter point. So we saw that multi-day run. Looks like it's still got plenty of strength. So hopefully that will continue. We're currently long the yen using the JCL leveraged ETF. So again, several of the other currencies had been in steep decline, got a bounce. So again, I did look at several of the Forex related ETFs we have in the research sheet in our ETFs Google sheet. But again, the risk reward didn't look that attractive. But if you're a Forex trader, it looks like they've got some bounces in several, the CAD, the Aussie dollar, New Zealand dollar. Looks like the Swiss franc's on a strong uptrend right now, like the yen. So again, former flight to safety currencies look to be strong again. So I hope that helps. Okay, so we've got all this data, and usually when we see a potential opportunity, we use our ETFs Google sheet to identify our long or short trade idea. You can find an ETF that satisfies that trade idea, and you can do the same anytime, 24/7, by joining our Patreon at the All Access or VIP level. And again, that's once we identify a trade idea, we can jump over to our Google sheet and find an ETF with a risk reward profile that best meets our desires using our ETF Google sheet. Let me grab a drink, and I've got a few additions to our ETF Google sheet that I want to go over. So if anyone in the chat also has some particular ETFs you want to look at, please let us know, and we'll try to take a look at those as well. So I don't miss it. I see Crow sharing one. BRZU was a 2X Bull Brazil. Let me see if I have that in our Google sheet at all. If not, we can also take a look at that. Okay, so it's not in the main sheet. So it looks like I have it in the research sheet. So BRZU, 2X leveraged on Brazil. So we've also got an ultra short on Brazil. So you can see the risk reward profiles of those if you're interested in the long or short on Brazil. Also got several others related to Brazil. So again, you can always do a find in our Google sheet for a particular category or particular ETF. And you can see, again, the risk reward profiles have links to the profile in the ETF database for more information on those ETFs. So you can take a look if you're interested in long or short Brazil, any of those. Thank you for sharing that, the Crow. Appreciate it. Also identified a couple new ones that I added to our main ETF sheet. This SMN is a leveraged short on the materials sector, ProShares Ultra Short. This one showed up as a multiple bottom in FinViz on the 2nd, so I did the research on that. That looked interesting. Found the long, the inverse of the SMN is the long is UYM. So again, if we want to long or short the materials sector, which is XLB, both of those are based on XLB. So we can look at the materials sector in our ETFs Google Sheet. So here you can see the risk reward profile for the ultra short SMN, the ultra long UYM, and the XLB. So again, we see the materials sector did drop. So this ultra short on the materials went up. So you see again the risk reward profiles for 52 weeks. Not that great, but decent, and longer term, pretty nice risk reward profiles. Again, you can access links to their ETF database profiles via the links in our Google Sheet. So again, two more ways. These are 2x. So if I open up, if I go in FinViz and look at SMN quickly, we see the multiple bottom. So multiple bottom around 7. You see it popped up, at the end of the week with that decline in the markets. So decline in the material sector gives SMN a pop. You can see it's based on swaps on materials. And again, it's 2 times the inverse of the performance of the S&P material sector. So XLB is the spider based on the S&P material sector. So this is 2 times inverse of the XLB, the long UYM. So again, if you were looking for an entry point in the short, I would look at the long. I would look at UYM. So we see it recently made a high. It's got a upper trend line it bounced off of. So those would be potential entry points into SMN. Again, UYM is the 2x leverage long on the material sector on XLB. So again, now we have ETFs. You can see it's mostly swaps. Got a few companies, Lindy, Sherwin-Williams, Air Products. So a few companies within that ETF. And again, it's 2 times the performance of the material sector index. So again, now we've got a couple ETFs we can also use to trade the material sector long or short. We've seen some decent volatility in the material sector. Again, short-term risk reward profiles, not too bad for the short. So if you think the material sector is going to continue to decline, you might be interested in SMN. So if anybody's traded those ETFs, those ProShares leveraged ETFs on materials, please let us know. That I would love to hear your feedback on your experience trading the material sector with those ETFs. The other one I wanted to quickly go over today is another one that the Crow mentioned in the live chat of last week's part 2, which is HDRO. So I added that one to our research tab. HYDRO. See which of those is correct. HYDR. HDRO. There we go. So this is a ETF on hydrogen. So if we take a quick look at that, see it's pretty low right now. Does pay a small dividend. It is optionable. Look at its definition. Blue Star Hydrogen Fuel Cell Index. So it looks like it's not leveraged. Globally listed securities involved in hydrogen-based energy sources and fuel cells. See some of the companies: NEI, NEL, Dosen Fuel Cell, Bloom Energy, Plug Power, Ballard, Linde, Air Products, Fuel Cell, etc. So again, number of related to hydrogen, clean hydrogen, hydrogen fuel cells. You can see the breakdown. 52-week range, about 4.5 to 875, so not too bad. Longer term's been much higher, been in pretty steep decline. Again, the whole clean energy theme kind of lost its luster for a while. So you can see the risk reward profile. Short term about 1.4, longer term much better. So if we get a turnaround in the sentiment on clean energy, more developments in the hydrogen area. Crow, I'd love to hear more of your feedback on experience with HDRO, the hydrogen sector, why you like the ETF if you've had experience with it. Says it's low volume still, so yeah, again, not a lot of interest right now, but that's a sentiment shifts over time. So we'll see. That's helpful to have that. Now we've got an ETF for the hydrogen sector that you can also find in our ETFs Google Sheet. So again, you can find that, track that in the research tab in our Google Sheet now. So I'll try to keep an eye on the chat for any other ETFs you all want to look at. We talked to, you can find the inverses for all the various indices, for all the tech components. You can find the longs and shorts, ARK-K, SARK, the short, etc. Biotech, LabU, long, LabD, short, etc. So you can find all of those to long or short if you want to play a rebound in a particular sector, tech component, index, etc. You can find the long or the short, many of them leverage. So you can find, again, leverage long, leverage short. Similarly with volatility, I've got several for volatility, UVXY, VXX, and we talked about the yen. We're currently long using YCL. You can short using YCS. So again, a great resource to find an ETF that you can play a particular topic long or short using our ETF Google Sheet. And again, we're currently long wheat already using the WEAT ETF, but that's still potentially an opportunity, particularly if it breaks that 550 area. Okay, let me grab a quick drink. I know I'm running long today. It's okay. I'll keep going, get through it. And if there's other topics, again, ETFs, etc., you want to discuss, we can follow up with those in a minute. Okay, our topic for this week is to make money trading in August. So we wanted to look at how August typically performs. We'll talk about, how can we make money trading in August of 2024. And we saw a pretty steep reversal, pretty quickly once we got out of July into August, which, as you'll see, is pretty typical. So you can see typically in July is one of the better performing months, and then you can see we get a pretty steep drop off, still slightly positive in the near term. So over the past 5 years, August has been slightly positive. The past 10 years, slightly positive. Over 20 years, though, slightly negative. So again, we've talked about this, been preparing for this, that July is very positive, and we get a drop off into August. Short term, again, slightly positive, but then we get a very negative drop off in September, bounce back into October, November. So again, we discussed this. We also talked about trading in the summer, making money trading in the summer. So we've been well prepared for this seasonality change into August, and we might have seen some front running that in late July, some profit taking. We saw some decline, some red days in July. I think that might have been front running this seasonality. But then again, we saw a little bit of a rally in Wednesday based on the Fed decision, etc. But then Thursday, Friday, once we were into August, pretty steep decline. So again, August is pretty much neutral. So again, protect your profits, trade defensively. That's what I would expect. We're seeing higher volatility. I would expect that to continue as well. So again, August, pretty neutral. So again, profit taking, protect your profits going into August. Again, September tends to be negative. So, flipping bearish into September would be historically appropriate. So we previously also discussed, this is the new chart in investing.com. If you want to see the consolidated previous chart, we also have a video on previously on making money trading in August. We also have short videos on the best performing sectors and industries in August and how the markets typically perform in August. As we saw, August typically pretty flat, pretty neutral, slightly positive in the near term. Also, it looks like, again, this year we're seeing a back-to-school sale in the stock market. Again, we saw a lot of stocks significantly decline the past couple days, may open up opportunities. So this video talks about our previous trade ideas, strategies, etc., for how to potentially take advantage of those back-to-school sales in the stock market. So I would highly recommend you also view that video and see those tools on how you can take advantage of back-to-school sales in the stock market. Again, we've been talking about trading in the summer. We've looked at these trends in the summer, how to trade the summer stock market doldrums. Again, even though volume tends to decrease in the summer, we saw significant pop-up in volatility. Tomorrow, we're going to talk about another way to potentially trade the pop in volatility as well. Welcome, Douglas PC, and thank you for the reminder to like the video, like the content. So I apologize if I missed your question. If you have an ETF or topic that you would like or question, if you please put it in the comments to this video. Greatly appreciate that. Also, if you have any recommendations for improvement to our weekly trading game plans, our videos, our tools, our community, etc., please put them in the comments to this video or in our Discord. Again, we'd love to have you join us and actively participate, talking about trading, etc., in our Discord. Again, our Discord's free to join. You can find a direct link in the description box below. And we have a suggestion box as well. So any feedback that you have, recommendations for improvement for any of our videos, tools, resources, community, etc., to help us add more value for all of our fellow BeachBum traders, we would love to hear that. So tomorrow we'll take all of this data and we will select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and various option strategies to also make money, generate income while we wait for the markets to swing back up or swing down. Again, we saw August tends to be kind of choppy, neutral. So we may want to take advantage of dividend payers and our option strategies to generate income while we wait for our swing trading to pick back up, potentially to the downside in September, as we saw in the historical seasonality. So again, we'll take all this data and discuss it with individual stocks, etc. tomorrow. So we hope you all join us for part 2 of our weekly trading game plan for August 5th through August 9th. Same bat time, same bat channel, 10 a.m. on Sunday. So thank you again to everyone in the chat for participating and everyone who's watching after the fact. And we hope to see you all again tomorrow. Thank you and have a great day.